This is an Uncovered Japan Company research report on Nissui Corporation, ticker 1332. Founded in 1911, Nissui has evolved far beyond a traditional fishing company. It catches and farms seafood, turns it into branded frozen and chilled food, and refines fish byproducts into pharmaceutical-grade omega-3 ingredients. This video examines why it earns the best operating margin among Japan's listed seafood majors, what its aquaculture investment must deliver, and why a quality business still presents an asymmetric valuation risk. The report is dated July 6, 2026, using a reference price of 1,287 yen from June 26. Nissui traded at 13.4 times forward earnings and 1.3 times book, above its own 5-year average and every seafood peer on price to book. Its 4.34% operating margin leads the sector, while the dividend yield is a modest 2.49%. This is not a cheap stock thesis. The return must come from earnings growth and rising distributions. Nissui's advantage is vertical integration. It secures fish through vessels, catch rights, and salmon farms, performs primary processing in lower-cost locations, converts output into branded food across Japan, Europe, and North America, and supports the chain with refrigerated logistics. The most distinctive step is byproduct refining. Fish oil that might otherwise be discarded becomes high-purity EPA and DHA for pharmaceutical and functional food customers. The same raw material is monetized repeatedly, while control of the chain cushions some spot price volatility. The segment mix makes the business legible. Foods generated 54% of sales at a stable 5.9% margin and acts as the cash-generating ballast. Marine products supplied 42% at a 4.5% margin and creates most of the earnings volatility. Fine chemicals is only 2% of sales today, but it is the differentiated option. Logistics supports the cold chain. In fiscal 2026, marine operating profit doubled from 8.4 to 17.8 billion yen, essentially explaining the entire increase in group profit. Revenue rose from 693.7 billion yen in fiscal 2022 to 931.3 billion in fiscal 2026, a 5-year compound rate of 7.6%. Operating profit climbed 49% to a record 40.4 billion, compounding at 10.5%. The pattern was not smooth. Food cost inflation drove a fiscal 2023 trough, while salmon volume and pricing powered the latest jump. Food stabilizes the level of earnings, but marine conditions determine the annual swing. Operating cash flow recovered to 53.2 billion yen in fiscal 2026, after a working capital shock 3 years earlier. But capital expenditure more than doubled from fiscal 2022 to a record 44.4 billion, concentrated in aquaculture and processing assets. Free cash flow therefore turned negative. The balance sheet remains sound, with a 40% equity ratio, yet absolute debt rose with the Wydran acquisition. The investment case depends on those farms and facilities producing higher, steadier margins, rather than merely adding capital intensity. 3 capabilities are difficult to copy. Nissui controls a global whitefish chain from North American catch rights through processing and branded products. It owns a large South American salmon platform through Salmones Antarctica and the acquired Yadran operation. And it can refine pharmaceutical-grade EPA and DHA, where purity, traceability, and regulation create barriers. Branded frozen and chilled foods, plus a refrigerated logistics network, reinforce those assets. The moat is real, but the upstream salmon platform remains exposed to biology, fish meal, fuel, and market prices. Capital returns have improved faster than the headline yield suggests. The annual dividend rose from 14 yen to 32 yen over 5 years, with 5 consecutive increases. Management now targets a payout ratio of at least 35%, a dividend on equity floor of 3%, and a cumulative 3-year total payout ratio of at least 40%. Nissui's 2.5% yield trails Umios and Kyokyo because its shares have performed better. The more important feature is a growing payout supported by expanding book value. Management targets 50 billion yen of operating profit by fiscal 2030 and hopes to arrive early. The report's base model reaches roughly 50.3 billion by fiscal 2029, but 2 levers do most of the work. Yadran must become sustainably profitable as Chilean salmon volumes rise, and fine chemicals must move from a 4.8% margin to double digits. Domestic aquaculture and overseas processing add support. Oil, wages, interest rates, and currency can absorb much of that self-help, so progress should be measured in realized margin, not production volume alone. At 13.4 times forward earnings, Nissui sat about 2 multiple points above its 5-year average. Its 1.3 times price-to-book ratio was also far above peers, near 0.7 to 0.85 times. The premium is defensible because Nissui has the sector's best operating margin, strongest capital return momentum, and most developed overseas salmon platform. But it removes the easy re-rating argument. From here, earnings, dividends, and execution must carry the return, while any loss of plan credibility can compress both profit and the multiple. These are the report author's assumption tests, not price targets or investment advice. By fiscal 2029, the base case is about 1,430 yen and assumes steady revenue growth, moderate margin expansion, and a 12 times multiple. The bull case reaches roughly 2,260 yen if salmon and fine chemicals overdeliver. The bear case falls to about 740 yen if costs squeeze margins below 4% and the multiple contracts toward 9 times. The downside is deeper than the base upside because weak earnings and valuation compression can arrive together. To conclude, Nissui is a genuinely strong operator, vertically integrated, sector-leading on margin, globally scaled in salmon and whitefish, and unusually capable in pharmaceutical omega-3 ingredients. Its dividend and governance have improved alongside earnings. The tension is price. The market already recognizes much of that quality, while oil, currency, fish biology, and acquisition execution can still drive a deep downside year. The 4-axis score is 12 out of 20, growth 4, value 2, macrofit 3, and supply-demand 3. For the full evidence, assumptions, and source detail, continue with Uncover Japan's free deep dives. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.